Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell, and I'm sitting down in Belize at the very end of our Palisade Real Asset Investor Conference with George Glasier. He's the CEO of Western Uranium. Western was kind enough to come down here and present on a top uranium company in the U.S., and of course that's Western Uranium. So George, thanks for coming back on the program once again.
Thanks, Colin. It's great being here. Great conference.
I think a good place to start is we had a keynote address with David Cates, who's the CEO and president of Denison Mines, gave a fantastic talk. He really focused on the macro picture, and he dubbed it the super cycle of uranium. You want to talk a bit about what David had to say?
Yeah, David, certainly knows his market. He's been in the industry. Of course, he's the CEO of Denison, a large cap market uranium company. Talking about where the market's going, where it's been, it's outstanding when he basically says we're doing the same thing, it appears, that happened in the early 2002, 2003, where the market just skyrocketed. And he says the conditions are such that that could very well happen again. And I think most of the participants down here that have been in the market and seen it agreed with him. There was nothing, no contrary views. It's pretty clear there's going to be an uptick in this industry.
That's right, and David put up a slide that actually applied very much so to Western Uranium, and you can imagine 4 quartiles. At the very bottom you have low cost, at the top is high cost. On the left side you have long time to production, and on the right side short time. And what he showed is that there's no way globally on average that you can fill the void of a lack of uranium supply, and what that means is the price is going to be driven up. But Western Uranium is in this very unusual situation where you're both low cost and quick time to production. Can you talk to us about the production?
That's right, because as David points out, there's a lot of projects potentially in the pipeline. All of them need long-term, lead times, and they need higher prices. So they won't even start on their projects till the prices are up, and then you're looking 5 to 10 years to bring these projects on. So anybody that can be in production quickly at a reasonable cost is going to benefit drastically in this market. It was an interesting slidey because he basically took the different kind of producers, their cost structure, and how long it would take them to get into production. And clearly there's going to be some major shortages. Even if the price were to go up tomorrow to $80, you wouldn't see the production ramp up for maybe 3 or 4 years to meet the demand.
That's right. And talking about some of the catalysts in place for uranium, maybe touch on a few things that David spoke about there.
Well, of course, the catalyst, and basically the utilities. Once the utilities start to come back into the market and recognize that they need to start contracting for long-term supply, that's going to really affect the supply demand and the contracting scenarios. And that's what he says. That's bound to happen if it starts this year or next year. But the curve is, the utilities are running out of those long-term contracts. The 8 to 10 year contracts that were signed, 7 or 8 years ago, they're coming to an end. And so that cycle has to start again. And the last cycle, those contracts were at much higher prices, and that's why the production, as he points out, the production hasn't dropped drastically because the production from the Camecos and the Rios, they're under long-term higher price contracts. One of the things he pointed out, nobody in this industry can make money at the $20 range or even the $25 range. So it's impossible to get additional production until you see the price go up. And that's exactly what's going to cause the price to go up, lack of production.
What I found really exciting during your talk is that David Cates was quite engaged in your discussion of Western Uranium, and that was a big endorsement to the rest of the investors to see somebody like David asking such good questions. He made a good point, and that is the fact that Western, which is trading quite well these days, it wasn't trading much a year ago, is listed on the CSE, which is a great starting exchange, but there's obviously more liquidity to be had on the Toronto Stock Exchange and the Venture Exchange. Do you have any plans to move over?
Absolutely. We're looking at that. That we certainly think that's an option for the company to get trading volumes up, more exposure. That is an option we're looking at, and could certainly announce something in the near future after we've basically taken a closer look at it.
And George, any change maybe on the listings in the U.S. in the future as well?
Well, again, we're certainly looking at upgrading our listing from the OTCQX, NASDAQ, possibly the New York Stock Exchange. One of the things that we're just about at the 1 year being a U.S. reporting company that we would qualify. So we've got a couple more months before we can basically look at that, but that certainly is in the future.
Western Uranium is a favorite uranium company of mine, and it's become a favorite of a lot of listeners. I've had a plethora of people send inquiries in, just wanting to hear more information from you, George, on what plans are moving ahead. So we've had a spike in the price of uranium from $18 to $26 a pound. Does that make a big impact and change for Western, and what are the plans over the next year?
Well, it sure does. If the price keeps moving like that in the next 6 to 12 months, that means we are basically ready to go into production at the Sunday Mine Complex, which is a low-cost facility in the U.S. And so that really, our plans also, would entail permitting additional mines to bring those on as quickly as we could, because they're not going to start next year, but they could certainly start in 2 or 3 years. If this price comes back like it appears to be doing now.
That's right. And George, is there any other plans for potential future acquisition? Western Uranium has a great collection of assets, and it's a bit of a hub and spoke model, kind of like what UEC has done in Texas, and the fact that your assets are close to each other and you could potentially do production out of the same mill. Is there other potential in that part of the world to add more pounds to the portfolio?
Oh, absolutely. We're looking at several projects right now, and I think there are a number of projects that make sense for a company like ours, since we've got the ablation technology. We've announced with a letter of intent to acquire the Pinion Ridge Mill project, so we put all the pieces of the equation together and certainly have the capacity to bring in additional properties, increase the resource base with properties in the area. As you say, it's kind of a hub and spoke situation, but in Colorado, Utah, Wyoming, New Mexico, those areas all fit within that area of interest we're looking at.
Great. And you have a close pulse on the industry. You've been in the business for a long time. Obviously, we were talking about the price of uranium moving up, but have you had any experiences maybe with other producers or utilities or investors that just kind of signal the movement in the market for you?
Yeah, interestingly enough, we do have one utility contract, and that contract was signed a year and a half ago, and we basically signed the contract. The deliveries don't start for a year or so, but we've really had very little contact from the utility. They were anticipating we were going to deliver on schedule, and got a call from them the other day, almost a panic call saying, "Are you going to deliver?" I think the utilities are now starting to look at the market and say who can deliver and who is going to deliver when the deliveries are required. And of course, we intend to deliver. There's no reason why we wouldn't, but I think the utilities now, this might be just the beginning of the utilities realizing it's time to start looking at the producers who can produce, who can deliver into the next 10 years.
One thing that David mentioned in his speech is that utilities are acting exactly the same as they did last time, where they're slow to react at first, and then I think Govin Friedland on the program said that they act like a school of fish, where a couple of them turn and immediately everybody turns. And so that's going to drive the price up pretty quickly here, possibly.
Absolutely. If one or two of them start to contract, they'll all jump in. They don't want to get left behind, and they maybe they're not a school of fish exactly, but they certainly follow the lead of some of the key participants. And some of the utilities, they're certainly the leaders. The bigger utilities lead, and so we're seeing some of that now, and maybe it is going to turn. The utilities may be the school of fish that's slightly turning.
George, thank you so much for coming back in the program. I know you've got a flight to catch here, so I'll let you go. But thanks for coming down, sponsoring the event. And I think it was a great event, and you gave a solid presentation there. So best of luck with Western Uranium moving forward in 2017.
Thanks a lot, Colin. It was a great conference, a great place to be. A lot of good participants down here, a lot of good questions. So thanks again.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen? Or are you too stupid?